This video is on the statement of cash flows. Now, I'm very excited to make this video today. The statement of cash flows, now, I'm going to make a statement here that I know a lot of you might disagree with, but I'm going to make it anyway. In my opinion, the statement of cash flows is the most important financial statement. Now, I know people disagree with me on this because some people might like the balance sheet and some people might like the income statement, but in my opinion, the statement of cash flows is the most important. And let me give you an example of how important I think it is. I read a lot of company annual reports. I read a lot of them. And how I read them is I do the same thing every time. When I pick up that report, I flip through to the statement of cash flows. And I read that first, and only then do I go back and I read the rest of the report. It's that important. So let's talk about why that is. Cash is a very special type of asset. It's the most liquid asset in a business. And that means that it can be spent very quickly and converted into other assets for your business. And so it's important to always keep an eye on what's going on with the cash in a business. Because if something fishy is going on in a company, it's going to show up in the cash first. So it's almost like a barometer for what's going on in a business. So let's talk a little bit about what the statement of cash flows looks like. The statement of cash flows will always have three sections in it. And you have your operating section, you have your investing section, and you have your financing section. So let's talk a little bit about what those are. Operating is where you have your activities that are related to your core business. So your business is going to be engaged in selling a product or service. And so you put all your economic transactions related to those sales under operating. And so you'll be able to see on whether your operations is a source of cash inflow or whether you're actually losing money from operations. Then you have investing, and investing deals with activities that invest money into your business, like buying a piece of equipment or buying a building, or it could be selling equipment or selling a building. That would be a cash inflow, whereas when you buy a piece of equipment, that's a cash outflow. Then you have financing, and financing deals with activities where you finance your business. So this deals with taking on a bank loan or paying off a bank loan. It also deals with issuing stock or paying out dividends to your shareholders. All these things that affect cash that deal with how you are financing your business. So those are the three areas in your statement of cash flows. And all of the economic activities of your business can fit into one of these three areas. And being able to see this helps you understand what's going on with the cash. So the next step would be, what types of questions should I ask to analyze the statement of cash flows? What are the things that I should take away or understand with the statement of cash flows? And I think there's three basic questions you should always ask. The first one is, what is my overall change in cash? Is cash going up or is it going down, and by how much? The second question is, what areas of my business are cash inflows? And the third question is, what areas of my business are cash outflows? So where is the cash coming from and where is the cash going to? So let's tackle the first question first. This is the easiest question. And it's really pretty simple. I mean, the change in cash can also be found on the balance sheet. Because on the balance sheet you see what was the cash at the start of the period and what was the cash at the end of the period. So you can determine the change in cash. And the statement of cash flows tells you the same thing. but in more detail. So you're going to be able to see whether your cash went up or it went down. Now I want to be careful here because it's important to understand that one or the other is not necessarily good or bad. Just because your cash went up, that's not necessarily good or bad. The point of what we're trying to do here is we're trying to understand the story behind what's going on with the cash. And you can understand the story by answering the questions 2 and 3. Where did the cash come from and where did the cash go to? And what you're going to see on your statement of cash flows is you're going to be able to tell what areas of your business where the cash flowed into your business and what areas the cash flowed out. And what you end up seeing is you get this picture of the economics of your business and where the cash is flowing throughout your business. So I think it's helpful to talk through an example of what an ideal statement of cash flow would look like. And I think most business owners would agree with this example. Ideally, most businesses would like to see a large cash inflow from operations. So that would mean that they're selling a lot and they're actually capturing a lot of cold hard cash in their bank account from sales. So operations would be a large source of cash inflow. Then, ideally, for the investing section, you would see a cash outflow. And what that would mean would be that you're taking some cash from operations and investing it back into your business. So you're either buying new equipment or expanding operations. And so you're making these investments that hopefully over time will have a high ROI that will generate more cash in the future. So investing would be a cash outflow. And then when you look at financing, financing would also ideally be a cash outflow because the goal would be that you would be generating so much cash from operations that that cash would not only fund your investing activities, but you would have so much cash that you would also be able to pay out dividends to your shareholders. So there would be a cash outflow in financing. So that's one example of what a statement of cash flows might look like. Let's talk through another example that might be less ideal. You might look at your balance sheet and you might see that you had an increase in cash. And so you look at that and you might say, yes, I had more cash, that's great. But hold on, not so fast. Because if you look at your statement of cash flows, you might see more of the story. You might be able to see that that increase in cash actually came from a financing activity where you brought in a whole lot of debt to your business. So taking out a huge loan would provide a lot of cash for your business, but that cash came from taking on all of this debt. Not only that, the statement of cash flows might also tell you that when you look at operations, you could see that you had a massive loss in operations. So the reason why you took on all this debt was to cover up the fact that you are having a loss from operations, and so you needed this extra cash. Not only that, this massive loss from operations might not be showing up on your income statement, because you might be booking sales on your income statement where you haven't actually received the cash yet. And so it might not show up on your income statement, but it would show up on your statement of cash flows. So I hope you can see how much information you could be gleaning from this financial statement. Now, you're going to see a lot of variation in statement of cash flows across different companies. You could look at 10 different companies and you're going to see very different statement of cash flows. And in fact, businesses that are in different stages of their business life cycle should have a different looking statement of cash flows. So I want to emphasize again that I'm not saying that one type of statement of cash flows is better than another. It's not like one is good or bad. The point here is to be able to understand the story behind what is going on with the cash in a business. So, to recap, we talked in this video about the statement of cash flows. I talked about why it's important, and then we talked about the 3 sections in a statement of cash flows. Then I gave you 3 questions to ask to help to understand what you should take away from a statement of cash flows. And we talked about 2 examples of what a statement of cash flows might look like.